on my brain, crypto, oh you're saying. Talk out with the code, man, I swear to the lane. Ice on my neck, that shine like a chain. If you don't talk money, man, I know what you're saying. Bitcoin hot, just body stocks. Nas with the 100, but I never gas. I went out the hood.
What's up, guys? Welcome back, Malik here. And today we're actually going to start off with my bad trade for the day. I had a really bad trade. I went for FedEx for the earnings, expecting a big move to the upside. For the earnings, they actually dropped $27. And this is the risk with options. Options can go really against you or really for you very quickly, especially when you have big news events like these. So they actually missed on expectations for earnings, so they did really bad on their reviews. And then that had a lot of investors sell off the stock as a reaction, as a punishment. And this, I don't know. I've been trading well on the other accounts, so this was a kind of riskier trade. I definitely would look at this as a gamble. This one was a trade for $720, so 240 per contract, and I bought three contracts. And this was a call for FedEx to go to 297. So actually, by the end of the day, I was down around $9. I'm expecting tomorrow I'll be down around $700, if not the entire amount. But I can't lose more than that. I'm just reviewing what happened here. So I entered thinking that FedEx was going to the upside. I'll kind of actually look at the FedEx chart after this and show you it is in a bullish trend. The big push it has done right now can be like overbought. It came down into a level that will be supported, but at the same time, that move down is enough to destroy the IV and option, which is the implied volatility. And you can see the implied volatility here is the 43%. So that's the amount of people trading this option. And if you don't have a lot of people trading, it doesn't have any reason to really stay up, other than the expectation that it can come up into value next week because it's an option that doesn't expire this week. So I kind of went with that to kind of protect myself, but then the market actually selling off FedEx that much isn't very good for my position. You can see I have the options here, the total return here, today's return. I can actually simulate my returns to show you what exactly is my estimated contract price now, because Robinhood has that much data to tell you what can be the market price for this option at the next day, given the current price of it. So if you had the current price of 252.65, my simulated return on the option is 705. So I lost 705 out of the 720 on that. So I would have about $15 left in the option. It's probably totally worthless. So that's three of those options that I lost on today. That was on the Robinhood account. So leaving that alone, no? So that's the first trade that I did. That was a really bad trade. Going to the still funded trader account, actually had, I think, one or two trades today. I think profitable trades, and I just exited after that. Like once those trades hit, I don't think I traded much. Is this accurate? No, 19, 19. I'm not sure. I don't fully remember the trades I made today, to be honest. But let's see. So December 19, I had three trades. One was a win for 49. One was a loss for 9. One was a loss for 6. So let's actually go deeper into the trades and see what happened here. So both of these trades are entered at 1. So 1 hour after market open. And then the other one I entered 4 hours after market open. So we're looking at the Wednesday market open 1. Mm-hmm. What's happening here? No, Tuesday market open at 1. Tuesday market open at 1. So right here is where I opened the first trade at 16,743.59. 16,743.59. And then I actually manually closed this trade because I felt like it was going against me 3 hours after. And the loss on the trade was very small as well. So I kind of like that. and then I just decided to kind of de-risk before entering another trade. So this one I lost at six, a loss of $6.83. The next one now, I entered on that 1 o'clock candle, 4 minutes different from the previous trade. I decided to double down because the risk wasn't looking too bad. And I think that will be an advantage to me because I can kind of see probabilities fast. So if I'm seeing two high probability trades where I can risk $12 and I can get a move of $100, I can really benefit from that, especially if I risk 120 to make 1,000 possibly. So I'll be looking to do that with these prop firm challenges. So the same trade, I close it out 3 hours after market open, similar to the previous trade. The one was a 0.07 and the one was a 0.08. The second one was a loss of $9.24. So that's where I kind of de-risked before I re-entered. And then the last trade where I made around $40, I had an entry around 4 hours after market open at 16,749. So we can actually change this here, 16,749. Copy that, 04. And then I actually manually close this trade when it started to get closer to the highs at around 18. So I'm looking to generally take profit between 9:30 and 12. That's when you get the move. You get almost a guaranteed move in a direction. You either know if you're right or wrong on the day. And once you're within that gap, you can kind of decide if you want to sell or not. So at this point, I sold for a profit of 49.66 and made no other trades for the day. So let's ensure I have the correct exit here at 16,819.98. And then today I have a trade currently running to the buy side again. It's just continuing with the daily buyer strategy. And right now the trade is up, but still I'm thinking the buy, just thinking that the market is just continuously going up. I don't know how long it can keep going up, but it's kind of overbought. And then this is what kind of gave me some bias because as the Nasdaq 100 is continuing up and up and up, we have solid green candle on Monday, solid green candle Tuesday. So all my trades have been buy side trades, and that kind of affected my bias when it came to FedEx. So you can actually see FedEx here. FedEx was continuously going up. I was looking at FedEx as moving with the Nasdaq, but FedEx actually sold off from 280 here to 252. That was a huge sell-off, and you can see that if FedEx basically has one candle that sells off this, I'm thinking we're gonna have bullish movement after that. Like it took out a lot of buyers here. That can be the real cause for a rally. It's possible I can hold this trade, but I only have 2 weeks for this move to play out. And you can see that FedEx doesn't necessarily move violently like that. FedEx is a slow mover. You'll still have days where it starts to go up, but nothing like what we have today on earnings where FedEx dropped $30. So that's basically it for today. You can see the max drawdown now on the account is 290, coming from closer to 500, where I would have totally lost the account. And then we're gonna just take it back over into profit and then be able to take a withdrawal from the funded live account because it's definitely showing just more consistency and just taking less trades. Because I took 3 trades today, I lost $15 and then I made 49 on one trade. I just decided to not trade anymore. The next day, I actually have one trade running. The max risk is about $17. So I'm not gonna really try to force a trade, just trying to gradually build the account. But then the mistake I also had today on FedEx is actually going to burn me. We can actually look at my TQQQ position as well. I'm trying to find that bullet. So, mm, so with the market continuing to go up, you have TQQQ, which is actually a leverage ETF that maps out the movement of the Nasdaq 100, but it's also a leverage move. So if it goes up, this kind of goes up more violently. And this actually have four buys for the 52 call. So if the Nasdaq continues to go up, I'm going to benefit from that on these calls. But then the FedEx call, I can't really do much about that since it has dropped so much. It's hard because you don't know if FedEx can make that kind of move within 2 weeks. But at this point, the contracts are basically worthless. And oh yes, in TQQQ, you can actually go on Robinhood and simulate your returns, and it can tell you what is the current value of your contract based on the after hours price movement. So you can see if I simulate my returns, I can actually see where I'm only up $2 total on the TQQQ at the current price, which is 50.95. But then over the next few days, if we have a move up, I can actually make more money. You can see simulate the returns better by moving this. If you move the dial, let's see, let's move this. So if you move the TQQ price up to 51.28, so tomorrow you'll have a return of 42. So honestly, this might not be the best week. I might close out some of the trades if I get the chance to exit because it's looking like they might go against me. But I'm not sure. But we will see how it trades tomorrow. It's earnings season, so the market's gonna be a little more volatile. And then we also have Christmas where a lot of people aren't going to be traded. But I'll see you in tomorrow's video. We have a bullish trade for tomorrow going on. And if that affects me, I'll just not trade anymore for tomorrow because I already had two profitable days. So it's better to try to keep that consistency than to force the trades. So I'll see you in tomorrow's video. Bye bye.